Welcome to Market Momentum, AI and Analysis. Right now the market is just full of crosscurrents, and it can be really tough to figure out what's going on. So today, we're going to use some AI-driven analysis to cut right through all that noise and find the clear signals.
All right, so here's what we're going to tackle today. First, we'll get a read on the market's current mood. Then, we'll ask the big question: is this a buying opportunity for U.S. stocks? After that, we'll check out the incredible rally in precious metals. Then we'll shift gears to crypto, where it might be time for some caution. And finally, we'll wrap it all up and talk about how to navigate these crosscurrents. Let's get right into it.
Okay, first up, let's talk about the market's current mood. You can just feel it, right? There's this sense of uncertainty in the air. And it's really being driven by some pretty big headwinds, both at home and abroad, that are making things kind of choppy for investors.
And that really is the million-dollar question, isn't it? With all the headlines swirling around and the market swinging back and forth, you've got to ask yourself, is my portfolio ready for this? So, let's break down what's actually causing all this turbulence.
So what we're looking at are a few key headwinds. You've got the potential for a U.S. government shutdown, which always stirs up some uncertainty. Then you throw in some new geopolitical tensions with China, and what you get is exactly what we're feeling right now: a lot of volatility and big price swings. But here's the interesting part, a little historical perspective. Shutdowns, as scary as they sound, often turn into buying opportunities. Why? Because fear makes people sell, prices drop, and that can create some real bargains that tend to bounce back once things calm down.
All right, so let's shift over to U.S. stocks, because this is where things get really interesting. I mean, if you've been watching the market every single day, it's probably been, well, frustrating, to say the least. But our analysis is telling us that if you just zoom out a bit, a completely different picture starts to emerge. A much more optimistic one, actually.
And this slide just perfectly captures that feeling, right? On one hand, you've got the short-term view. The S&P 500 has been basically flat for over a month. It feels like you're just treading water, going nowhere fast. But then you look at the long-term view, and what looks like frustration is actually opportunity. These flat periods, these consolidations, they're often the market just coiling up, building a solid base before it makes its next big move up. This is where having a little patience can really pay off.
So you're probably wondering, what kind of payoff are we talking about? Well, based on the current technical setup, the analysis is pointing to a potential upside target of 11% for the S&P 500. Now, that's a pretty significant move from where we are now, and it really drives home the point that these flat periods can be entry points, not a reason to head for the exits. But wait, it gets even better. If we shift our focus over to the tech-heavy Nasdaq, well, as good as the S&P 500 looks, the Nasdaq's chart is showing an even more constructive, even stronger setup.
And the reason for all this optimism comes down to a classic technical pattern called a bullish wedge. The best way to think about it is like a spring coiling up, getting tighter and tighter. What's happening is that the price action is getting squeezed, but each time it dips, buyers are stepping in at a slightly higher price. It's building pressure, and that often happens right before a big upward breakout. And right now, the Nasdaq is showing a textbook version of this pattern.
Okay, so we've talked about a market that's building potential. Now let's pivot to a market where that potential is being unleashed in real time. I'm talking about precious metals. This is where the momentum is obvious, it's powerful, and it's happening right now. If you look at gold, for instance, this rally hasn't been some crazy, chaotic surge. No, it's actually been incredibly orderly, almost predictable, really. It's been following this very distinct pattern of movement, a pattern that we've seen repeat itself over and over again.
And here it is, what we call the stair-step pattern. It's so clear, right? First, you get a sharp rise, a strong move up. Then, it's like gold takes a little breather, trading sideways for a bit to consolidate those gains. And then, boom, it kicks off the next leg up. Right now, the analysis is suggesting we might be in one of those consolidation phases, just getting ready for the next potential surge higher.
Now, don't get me wrong, gold's climb has been really impressive. But what's happening with silver? That's on a whole other level. The move there has been fast, it's been aggressive, and honestly, it's been just plain explosive.
Yeah, the analysis actually uses the word parabolic, and that is the perfect way to describe it. This isn't a nice, gentle stair-step climb like gold. This is a rocket launch. And because of that, it's pushed silver into what technical analysts call an extreme overbought condition. Now, that doesn't mean the party's over, but it does signal that even though the trend is super strong, a short-term pullback or just a little cool down could be coming up soon.
Okay, so let's recap. We've got potential strength building in stocks and an absolutely explosive rally in metals. But to really navigate these cross currents, you have to know where the momentum isn't. You have to see where it's flowing out.
And right now, that story is playing out in the crypto market where, while the signals are pretty much flashing red.
Yeah, this really isn't a time to be wishy-washy. The technical analysis is just clear. Multiple key indicators across the big crypto assets have flipped to an outright sell signal. Trying to start new long positions right now, according to this analysis, would be like trying to swim upstream against a really, really strong current.
And if you look at the details, you just see how consistent this message is. For Bitcoin, it's a clear sell. Those key support levels that were holding the price up, they've broken. The note from the analysis is pretty blunt. Don't be stubborn here. For Ethereum, it's basically the same story. A really crucial support level is breaking down as we speak, which suggests there's probably more downside to come. And then there's XRP. It's kind of on the fence, but the guidance is to just wait and see what Bitcoin does. And right now, Bitcoin is pointing down.
So, let's put it all together. You've got stocks that look like they're coiling up for a potential move higher. You've got precious metals in the middle of a powerful rally. And then you have crypto in a clear downtrend. I mean, talk about cross-currents. So, how in the world do you make sense of this? Let's break it down into a simple, coherent strategy. Okay, here's the game plan in a nutshell. For US stocks, the idea is to view any of this volatility, any of these dips, as potential entry points to build your long-term positions. For precious metals, gold and silver are in strong uptrends, so you ride that wave, but you keep an eye out for a short-term cooldown, especially in that crazy silver market. And for cryptocurrencies, it's all about extreme caution. Key support levels are breaking, the trend is down, it's really about aligning your strategy with where the momentum is flowing and where it's flowing out.
Which, of course, brings us to the final big question. In a market that's sending all these conflicting signals, where are you going to find your momentum? Because with stocks, metals, and crypto all telling different stories, the key is figuring out which trend fits your own personal strategy and your own tolerance for risk. Understanding these crosscurrents is really the first, most important step. Thanks for joining us. Your subscription and likes help us create more content like this.